Well, let's shift gears then and connect with the management of Mahindra Finance as well to talk a little bit about how they have looked at the impact of the second wave on rural India and some of the hurdles as well that they foresee going forward. Ramesh Iyer is the VC and MD at Mahindra Finance and now joins in on the show. Thank you so much for taking time out, Mr. Iyer. Hope everything is safe and well at your end. Help us to understand the on-ground situation, because largely due to these localized lockdowns, transport remains very subdued, and reports even suggest that there's been a fall in the truck rentals since April. That reflects a slowdown in the overall economic activity. In light of this, paint a picture as to what exactly the on-ground situation is like.
So I think, post 15th of April or so, the lockdowns in different states begin to happen. If you ask me one-liner on what's happening, I think the sentiments are pretty low, both at the consumer level as well as, I would say, even at the employee level. So there's so much of uncertainty about, what next and when will this get sorted out. So I think people are very clearly on a wait and watch kind of a mode. And that has impacted movements up there. People are not able to travel. Consumers are not able to come to the branches or dealerships. So I would say in this May, what we are seeing so far is exactly almost what we saw maybe last year, April, right? So no activity per se. Dealerships are not operating. So I would say pretty kind of slow and nothing really happening out there when we look at the first 10 days of May or 12 days of May.
So looking at the current situation, then reports suggest that a 50% rise in the customer defaults could be witnessed. What is it that you're expecting, and what's the outlook on collection efficiency, NPAs?
So I don't know this 50%, etc., from how it's computed, but clearly we would see consumers wanting to hold back cash and find an alternate way of paying it later. So one of the announcements from the regulator, which is looking at restructuring for consumers, will probably be very useful to the customers. Maybe even a moratorium in a situation like this could become necessary, because this may not last too long, and therefore the customers may just want a 2 months or a 3 months kind of a break in between. So I would think, any of these measures would help the customers. But clearly, from an earning potential of the customer, their vehicles are not in operations and they are all earn and pay consumers. So therefore, they would not be able to service the loan unless the activity begins to happen. And even if they have the cash with them, which we do believe they have, the agri was good and the cash is with them, they may like to hold it for looking into what the next immediate future looks like, and after that things would start. So I would put it as post-July is what one can start seeing everything turning more positive, and the festival season expected to be pretty good.
All right, so that's the latest on that front. And if we take a look at some of the other areas as well, share collection efficiency, what's been the trend like there, Mr. Iyer, across segments, across states, on collection front? How are things looking there?
April was good. Even now, when we see people who resort to payment through post-dated checks, or people who are looking at repayments through ECH mode, etc., the digital payments, they are able to service their loan based on their cash flows. But look at the consumers who were earning on a daily basis or on a weekly basis, they get their cash flows, etc., are the ones who are going through difficult times. So I would think the tractor collection should be good, with the harvest being good and the cash flows are coming in. So I would kind of, split the collections into 2 or 3 buckets. The agri-dependent cash flow is good, so therefore that should service well. The semi-salaried or a salaried kind of customer who gets their money monthly or fortnightly should be able to service their loan. May not be full installment, but for sure part installment. But the daily earners, weekly earners, the three-wheeler operator, truck operators, commercial operations at the local level, these kind of vehicles, school bus operations, etc., are definitely going to be postponed, and they would take a little longer.
Okay, so that's on the efficiency front. Has there been an impact on passenger vehicle financing in rural markets? What's the outlook there?
So I think, again, I'll put this into two. One is ability to go and buy. So when the dealerships are not in operations, the RTOs were not operating, right? So therefore, they were not able to, even if they wanted to, they were not able to go and maybe procure a vehicle. So that is one set of buying which is slowed down because of the inability to go and buy. The second is, the need to buy. Definitely, they would be asking this question as to, is it so urgent to buy now, or could we wait for a couple of months, especially people who want to exchange their old vehicle, or people who are buying first time a vehicle and to put it into operations. So these segments definitely are postponing their purchase. So we have clearly two segments. And I would think the personal segment would bounce back faster because that's very need-based. And once the dealership starts and the RTOs begin to register, I'm sure they will start buying. But the commercial segment would take a little longer, whether it's a small vehicle or a large vehicle. I think they would take a little longer to come back.
The overall harvest and how you see the tractor collections as well shaping up, but just give us a sense as to what the outlook is in terms of the impact on cash flow from rural customers, rural demand, because you have a fairly high presence over there.
Yeah, so as I said, if a normalized collection efficiency was to be 90-95% or so, I think in a scenario like this, one would expect it would be somewhere around 70-75%. And it's important to understand, you have to segment them differently. As I said, the personal segments would continue to service, the commercial segment would take a little longer. And consumers who need to come to pay their cash, or we need to go and collect from them, is the one which is actually impacted. But I would think those are temporary impact as things normalize. These are people who earn their money and then they start repaying immediately after that.
And what are the capital raising plans as of now? Any need to raise capital, and how long will your current capital last?
So we are sufficiently capitalized. We just did a rights issue, if you recall, and our capital adequacy is upward of 20%. So at least for the next couple of years, there will not be a need for raising any fresh capital.
Okay. Now, there seem to be two kind of scenarios emerging. Higher agri-product prices, a solid monsoon, that's going to be a positive as well. And rural India has this time, of course, been impacted due to COVID. So if you put together some of these factors at play, what do you see as the resulting impact going forward?
I think, I started with that the sentiments are low, the agri cash flow is good, and rural depends on, clearly 2 or 3 types of cash flow. One is the agri, second is the infra cash flow, third is the people movement earnings which the consumers have. So both on the infra front and on the people movement, etc., there has been a slowdown, whereas the agri is done well. So clearly we would think that if the pandemic was to come under control, let's say somewhere middle of June or so, it would take another month for the sentiments to return back to normal. By then the monsoon would be receding, and sometime in August we would finish the season. I think post that is what we would expect, that things will become extremely buoyant, and I would see a spurt in demand to happen post August. Maybe this festival season will be one of the best.
Specifically on tractors as well, CRISIL has seen tractor volumes seeing very limited growth of about 3 to 5% for FY22. Do you agree with those numbers, given the kind of outlook you have on demand?
So I would think at the back of a good agri, this number is okay, but I would very strongly believe that once the infra opens up, the contracting segment would start buying tractors, the replacement volumes will kick in. And I would put a much higher number to the growth post-August and maybe post-September after the monsoons. So agri-based demand, 4 to 5% growth could be okay. But if you look at, as I said, infra kicking in and the contracting segment and replacement volumes coming in, the numbers could look very different.
Thank you so much, Mr. Iyer, for sharing with us your outlook on the business as well as the kind of impact you're seeing for rural, your overall disbursement growth, and what the second wave impact is.